or as I said at the start of the class, this is something that I've covered a lot, but as always, it's something that can constantly be expanded on and retaught, I think, and rejogged. It's an area that I use myself, and especially on the higher time frame, it's a really nice place. It's, you know, preferably on the high time frame, you can use this to look at swing longs and high time frame spot entries, especially at the moment with, you know, us moving into 2024 and a lot of people thinking that, you know, back in maybe mid 2024 is when we start to run again. You know, next pullback we're looking at picking up spot, me personally, so I'm looking at these high time frame levels using order blocks, right? You know, nevertheless, this is an area of trading and a concept that I feel I can get across to a listener and help an individual learn eventually to use in their own day-to-day trading. As I mentioned, I've got a lot of supply and demand order block content out there already, but I think it's a good area to update and keep on top of as I constantly developing the concepts I'm using. So it's not to be mistaken, because in like the fundamental side of things, supply and demand can be completely different. You know, supply can be known as the total amount of crypto that actually exists for that asset, right? So like the max supply of Bitcoin is 21 million. This is not what we're talking about in this episode. It's like a trading concept which has just somehow got the same name of it. And of course, you know, it's like the supply is the label to identify an order block. And the demand is also known as how many participants may be interested in that specific asset. So like, for example, BTC was a high demand asset back in the bull run. The use case of different cryptos may lead to them having a higher demand. Again, this is just a label for an order block. I'm not talking about the fundamental side of the demand of things. You know, it's very important to understand market structure and how we view structure and breaks before embarking on order blocks. So apologies if you guys are not really up to scratch on market structure, but I hope that we can work on that in the near future. Episode 5 is a class that I really think that everyone needs to go and look at, as it is a concrete to your trading. So supply and demand, basically, you know, it's a name and a label used to identify two types of order blocks, that being a bullish demand and a bearish supply. They're a concept used in trading and based on the idea that when price forms an impulsive move, which always breaks structure, right? So the impulsive move has to break structure. This is important to remember. It leaves behind an order block. The order block that is left behind lies down to the direction of the move. So an impulsive move to the downside that breaks structure forms a supply. An impulsive move to the upside that breaks structure forms a demand, right? So supply is bearish. It's like a bearish resistance, right? So we basically view supply as resistance and demand as support. So once an order block has been formed, we view these areas as a point of support or resistance, and a reversal point for price where we can look for an entry or to take profit, right? So they don't have to just be used as entry points. We can also use order blocks as a place to take profit, right? So if we're long from below, we can target a supply higher because there's liquidity there. We can look to target the liquidity higher and thus being a take profit point for our long trade, right? So the concept behind them is that they're very specific zones which are formed when a large amount of buying or selling has occurred previously before that impulsive move, right? So we could say that there was a high amount of volume formed just before the downside move that broke structure, right? And then we have this order block left. You know, there are places in price where stacked orders, and sometimes we have underwater positions that have been opened and are looking to get out in a small loss or break even. So leaving a block-like structure. So we could say, before we have this impulsive move to the downside here, what we could say is that we have some longs built up in here, right? We'll get into this more shortly, but when we revisit that area, the longs that have potentially built up here, that have been underwater, they look to get out, break even. And what happens when long sell position? They add sell pressure, right? So then they're going to add sell pressure to the downside, right? And then it works the same for shorts, right? If it's a demand, right? So for in shorts case, change this to white. If we have, you know, price trading sideways and we have shorts building here and we get this move higher and these, you know, and these shorts that have built up here are now underwater going up here and they're still holding. So if we look at flow and we see that the shorts are still holding, when price comes down to test this order block, these shorts look to potentially get out break even, which then creates buy pressure and then we get a bounce, right? So it works the same way. Imbalance between supply and demand is the main reason why a price moves the way it does. As always, we're attempting to find fair value in the market, you know, and fair value for that asset. When supply exceeds demand, then we should see price downtrend, and when demand exceeds supply, then we should see price move in an uptrend. You know, if supply and demand are neutral, then we see a range in price. So everyone following so far? We get into sort of examples now, visual examples to make things easier. Isn't that a mechanical push-up? Yes, so that would be called a mechanical bounce, rush, correct. As I've spoken of, right? If shorts are closing and price is bouncing, that means it's a mechanical bounce, right? So it's mechanical from shorts creating buy pressure. So this is basically what they look like. A supply order block looks like any of these three blocks here, right? It's formed after impulsive move that breaks structure to the downside. So as you can see here, it's the last up candle before price breaks structure is your supply area. So we can see here, as you know, as I said, it's pretty important to understand structure, but I don't really want to talk about structure here. I want to talk about supply and demand. But we can see that price broke structure to the downside. This was the last up candle before price broke down. We can see we come up, we test this area and we break down again. And then the same thing happens again. This was the last up candle before price broke structure. Once we come up to test this area, we react and sell off again. And then again, price broke structure, buy an impulsive candle to the downside. This is our supply, right? Impulsive move, supply, retest, impulsive move, supply, retest, impulsive move, right? Then we come up and then we retest the supply, right? So this is where we're going to be looking to take our short, and then our stops would be above the highs, right? And then the same case for demand here. So any of the three examples below, it is formed after an impulsive move to the upside. So we can see here, impulsive move to the upside. This was the last down candle, right? Because in this case for demand, it's the last down candle before price broke structure to the upside, right? So this was the last down candle. You can see it acts as a sort of support area, right? Eventually we get another impulsive move higher that breaks structure. This was the last down candle. Price comes in, retest this area, bounces higher. Again, impulsive move higher. This was the last down candle before that move broke structure. So we would look for this to also play as a support area on a retest. How should we know if the candle wicks through two order blocks but then get back in the same one? See you later, MJ. Good luck. How should we know if candles wick through two order blocks? I'm not sure what you mean by that, Arash. You'd have to send me an example. Do you mean when we bounce into an order block multiple times? I mean, some say that the more you would emit it, like the more you bounce into an order block, right? The less we can say that it's eating demand, right? So we can say that every time we're going into this order block here, we're eating at the demand that's in this order block, right? Which is sometimes the case. But again, since the last time I sort of spoke on supply and demand, I didn't look at flow. So at the end of the day, I always think it comes down to flow and see what we're looking at in the order block. And also another thing that I used to comment on was that if we wicked the underneath the order block before the impulsive move or above, then someone making quack noises. Don't start that because everyone's going to be on it. I lost my train of thought. But yeah, again here, we can see we wicked under before the impulsive move. It doesn't invalidate the order block for me. That was Jack for sure. There's mouse. How should we know if the candles wick through 2 order blocks, but then we get back in the same one? We put our stop lock order blocks. Stop loss above order blocks. Yeah, you just put your stop loss above. I prefer to play with like acceptance instead of getting, so you don't get wicked out, you know. Everyone following so far though what the supply and demand specifically looks like. I think those voice notes only work in here because I allow you guys to talk. Whereas if you were in the voice channel, it wouldn't work. So quick run through on sort of key parts of the order block again before we move on. Order block must lead to an impulsive move and a break of structure. I want to sort of highlights here. We are only interested in order blocks that have fast illiquid move that usually leave a fair value gap also. So usually when we get these fast illiquid moves, we also see a fair value gap formed, right? So this this imbalance here. So we can see the fair value gaps formed here. This is a FVG. And then again here, we can see there's a fair value gap here. This is like FVG. So when we have a gap between the 2 wicks, don't really want to talk about fair value gaps in this episode either. But it's something to look for. Usually if we have a fair value gap, that signals that the move was illiquid enough to form an order block, right? You know, not all order blocks are going to work. Make sure you're using other confluences for a reversal and have some other reasoning for price to reject from that area other than there is an order block here. You know, this could be high volume node edges, support resistance, level fibs, whatever you may use. Also would like to add point of controls, right? POCs in supply and demand are very useful. Didn't talk about that specifically in this class, but I spoken on this a lot elsewhere. If you have a point of control, if you have an order block and also a point of control in that order block, it adds more reasoning for a bounce from that area. Point of controls are OP, especially when using them in order blocks. I got a pocket, yeah, POC is the perfect line into order block. Like if you have an order block that has a POC in it, then look to bid the POC, right? Because the point of control is, you know, point of control is the showing you that there was a history of volume traded at that area. So likely if we go back to that area again, there's still going to be participants that are interested there, right? So if we say that we're trading for a day sideways like this, yeah, and we have a point of control in the middle, so we're trading sideways for a day, and then we have a point of control in the middle like this. So let's say this is 1 day. This is 1 day here, right? The next day we get this break higher, and as we come back we have an order block here, right? So we have an order block here and then the point of control. We'd look to bid this point of control because we know on the previous day that the most volume was traded at this point of control. So then we look to take the trade at the point of control here and then target higher, right? Yes, I use PVP. I got a lot of content on volume profiles as well, and point of controls that I can share at some point. It's all in Wall12 somewhere. That's why I need to get the website set up, but I'm so bloody lazy. Manual fixed range volume profile. Yeah, I used fixed range volume profile, periodic profile, monthly, weekly, daily, and not so much daily actually. If the move forms the order block takes out an opposing order block, for example, price forms a demand, and while it breaks structure, it smashes through a supply higher. This adds more confluence that the demand will be strong once we get the retest of that area. This is ignoring breakers. I'm not going to talk about breakers today. That's going to be a future episode following on to this one. Order blocks can be found on any time frame and can be used to scalp, swing, and day trade. Any style and time frame you can find an order block, you can trade it. The higher the time frame, the larger the move is likely to be from that order block, right? That's a given. It's important to understand market structure before being able to understand order blocks, given that structure breaks and the change of structure is the foundation to being able to identify where an order block may be. You know, how would you know if an impulsive move led to a break of structure or not if you do not understand market structure, right? So, question: the higher the time frame is, the pullback we get to the order block on that time frame, the stronger the impulsive move, or it doesn't matter. The pullback gets to the higher our time frame is, the pullback we get to the order block on that time frame, the stronger the impulsive move, or it doesn't matter. No, it doesn't really matter. There's nothing specifically to say what makes an order block stronger, but there's a high chance that if you're trading a daily order block, the move from that daily order block is going to be higher than if you were trading like a 5-minute order block, right? That's a given. I have to review changes. Ray, have you watched episode 5 of MSM yet? My newest episode of the course. Yeah, check episode 5 out. It will cover everything for you. So as I mentioned at the start of the class, there are only two types of order blocks, that being supply or demand, but there are two concepts for each order block that can be used to identify that specific order block, right? So continuation trade and setup, and also reversal trade and setup. So we have, four. So we have a demand continuation, demand reversal, supply continuation, and supply reversal, right? I've spoken on these concepts a lot, but it's the easiest way to identify a true order block cluster. So the rally side of things here, so we got, like, for the demand continuation rally, base rally. The rally is the upside price action, usually the impulsive move that breaks structure to the upside. So that's what we call the rally. The base, this is wrong. 1 second, guys, before I confuse people. Nice. So the base, the downside price, this is still wrong. I don't want to confuse you guys. There you go. Voila. Like it never happened. So drop, the downside price action, usually the impulsive move that breaks structure to the downside, right? And the base, this is the consolidation period after an impulsive move. So this base usually happens after the drop. So this is the base in here, or it usually happens after the rally. So this is the base in here, right? So rally, base, rally, drop, base, drop, right? It'll make more sense on the next slide. So this is a supply reversal setup, okay? Actually, we'll start with the supply continuation because this will be easier. So when we're in a downtrend, this is basically what we're looking for continuation. We have a drop, we have a base, and then we have a drop. During this base, we form the supply, which we're looking to short on the retest, right? So we can see here, price comes down. We're in a downtrend, right? So we're forming lower lows and lower highs like this, right? So price comes down, we form a base area, and then we drop again. We break structure, break of structure here, because we make a lower low, right? This is a lower low here. So then we get the drop, base, drop. Then in this impulsive move to the downside, we formed that supply area that I spoke of, right? So this is the supply. So if we look at the previous slides and we look at it quickly on this is what's happening with drop, base, drop. We look to short the supply, right? And then again, it's like drop, base, drop, right? And then we're looking to short the supply here. So the demand continuation is what we're looking for in the uptrend. So it's like rally, and then we form the base, and then we form the second rally. For the demand for the continuation, the demand continuation order block is formed during the base period, so it's formed in here. And like we said, there's potential that we could have a point of control in here, and if we do, that's the area we're going to be looking at bidding on the retest. So like I said at the start, what we could have is during this base period, we could have shorts building here. Then what happens is once we get this move higher and the shorts are still holding, when we come back towards their entry, they're looking to get out, and then we get the mechanical bounce away from that area, right? So the demand reversal and the supply reversal is slightly more confusing, because what we have here is a change of structure, right? So we've gone from making lower lows and lower highs to now making a higher high, right? So we've gone from making lower highs to now making a higher high. So this is a structure change. And how this is done by a drop, base, rally, right? It will make more sense in the following examples. Right, so we have the drop, then we have the base formed, we have the change of structure pushed by the rally, and then we bid the demand, because the demand would have been formed when we got this push for the rally, right? And the same goes for the supply reversal. This will make a lot of sense towards the end. So we're in an uptrend, we're making higher highs and higher lows. Eventually we come down and make a lower low. Here, lower low, this higher low, higher low, then we make a lower low, right? Structure is now bearish, so we're looking for a reversal, hence the supply reversal. We look at bidding the supply on the retest for the short, right? Do we talk about how to identify basing candles? Yeah, we'll talk about it on the next bit. There's not really anything to identify the base period other than it's just the period between the drop and the rally and the rally. So it's where the order block is formed. So in this case, we can see here we have the rally up, right? And then we have this is a demand continuation, right? This is the rally, this is the base and the rally. So we get the rally higher here, rally higher. We get the base formed, right? So this is the base is formed in between the rally and the rally. We get this impulsive move to the upside here. That breaks structure, right? We make a higher high here. And this was the demand. This is the last down candle before price breaks structure to the upside. We look at bidding the demand here, and then we see the reaction we get, right? So this is the daily chart for ETH. Now if we look at the 4 hour on it, we can see it slightly clearer. We can see here the rally. This is the rally here. This is the base, so the base period that's formed. The daily order block, the daily demand is formed here. So this was the daily candle on ETH. And you know, this was sort of what was happening inside it, right? Then what happens is price comes down, retests this daily demand, and then we go higher. So it's going to look like rally, base, rally. When we come down to test this order block, right, rally, base, rally. When we come down to test this order block that was formed during the base period, then we look to take a long position here. Are you guys following? I know it might be a lot to take in. So we don't really look at ERC/FERC, we just look at how pricing in general we neglect. What is ERC, FERC? I don't know what that is. Okay, good. I'm glad some people are following. It can be a little overwhelming if you have if you're stepping into this and not understanding what supply and demand is at all, you know. Extended range candle failed, extended range candle. That's if price is ranging, right? In this case, we're not ranging. We're in an uptrend, right? We're forming higher lows. You know, in this case, we're forming, you know, higher lows. We're forming a trend here, right? If we're ranging, we're going sideways, if that makes sense. You know, when we're ranging and we're going sideways, we're not really forming structure, like strong structure. We're just going sideways, right? But when we're going in an uptrend, we're not thinking about a range. You could technically view the base area as a potential range, right? But there's not really much to say that this is ranging, right? This is just the accumulation phase before the next auction higher, if that makes sense. And just like always, we identify higher time frame points of interest and then use the lower time frame for our entry triggers and execution, right? So we can see here price comes into the order block, forms an over under setup and gives us a trigger to get long from there. Yeah. Example 2, there's only a couple more examples. Example 2, ETH H12 chart here below showing a supply reversal setup that ETH formed back during its top at 4,700. So this setup actually marked Pico top for ETH using this simple concept, right? Back in 2021. So we're looking at a supply reversal, and if you remember, this is the supply reversal. Rally, base, drop, right? So rally, then we have the base, and then we have the drop. Catch layer mouse. All good, man. It's the up candle that causes the drop. So we can see in this case, we have the rally higher, then we have this base period, and then we have the drop that breaks structure to the downside. Right? Rally, base, drop. Then the supply is formed, right? Because this was the last up candle before price broke structure to the downside with the change of structure, right? This was the last up candle before the impulsive move to the downside that broke structure, right? And if we remember, if we go back to here, again, it's exact same concept, right? It looks exactly the same, just on the chart. Then we look at bidding the supply here for the short lower. We can see the rally base drop formation that I displayed to you on this on the prior page, right? Rally base drop. Again, this is why it's important to understand market structure in these setups. Otherwise you're just going to be clueless. Example 3 is a supply continuation following on from our previous setup. So what we're looking at here is continuation from here, right? So from here, what happens from price, right? Once we know that the trend has flipped bearish, right, we want to be focusing on playing that new trend. In this case, ETH structure chained and is now forming a bearish structure to the downside. We want to follow this trend and play with it until proven otherwise, right? So in this case, we're now looking at supply continuation, drop, base, drop, right? We can see here, price comes down, drop, base, we get the break of structure, we have this last up candle before the impulsive move to the downside, so then we form our drop. So then we get drop, base, drop, price eventually curls back up to retest our supply area, and then we roll over again, right? Go over one more time. Drop, base, then we get this base is formed because we have this structure break here, last up candle before the impulsive move down. We look to bid this candle using our rectangle tool to draw the order block, and you can see it on the lower time frame here. Supply formed during the base period. This is a 12-hour order block. This is the 4-hour chart. Is everyone like following? I know it can be slightly confusing, but these are the easiest ways to identify demand, right? Just labeling rally base rally, drop base rally, drop base drop, rally base drop, right? That's good if you're still alive. Is there a probability of price bouncing without actually touching order book, in which people see that the price is cheap enough from them, so they start spot buying, therefore pushing price up? Yeah, of course. Like, order blocks don't have to hit. They're just a concept at the end of the day, and a way that you, as a trader, can potentially have an edge in the market and look to buy or sell an asset. Like, there's nothing to say that the order block has to hit, and there's nothing to say that if the order block does hit, that it has to reverse. Like, a lot of the time, order blocks can just, if, as I said at the start of the episode, right? When supply exceeds demand, then we should see price downtrend. When demand exceeds supply, then we should see price uptrend, right? If at the end of the day, if supply exceeds demand and we're coming into demand area and supply is still strong, the sellers are still there, there's nothing to say that all of the buyers that are at that demand just get eaten through instantly, right? So we have this demand here, we have buyers here. So this is demand. Let's do it on the chart. It's got order block here, right? This is demand. Right? Let's say we have 100 buyers willing to buy in this demand, right? So prices come up, we form this demand area here, we break higher, and prices coming down into this area, right? As we come into this area, right, we're going to auction, right? We're going to auction between buyers and sellers, right? Here, there's going to be an auction between buyers and sellers. If these 100 buyers get eaten up, let's say there's 200 sellers, right? Yeah. If let's say there's 200 sellers into this order block and there's only 100 buyers, these buyers are going to get eaten up instantly. Likely price is going to have to look lower for these sellers to be able to auction out of their positions, right? So they need to look to have to look for lower prices to sell to buyers who are willing to buy down here, right? So there's nothing to say if we come into this area, sellers continue to exceed buyers, that we just break through that order block, right? Does that make sense? Market's just an auctioning process at the end of the day, and the market moves depending on who has the heavier hand. That's all it is. And we as shrimps look to find an edge in the market and trade it, and you know, whatever bullshit way we try and do, right? That's all it is. I'm just feeding you that bullshit. So, you know, a bit of conclusion here before we wrap things up. End of the day, you always want to be playing with the trend. Use the continuation setups to be trading with the trend, and use the reversal setups to know when that trend has flipped. You know, I preach this every day, every time, but structure is the foundation to trading. If you are only using time-based charts, understanding structure is the concrete to your trading, and it should be mastered. Hence the name of my content, right? Market Structure Masterclass. Once you master understanding market structure, you'll be able to trade order blocks easily, right? Because this might seem really confusing, but as soon as you understand that this is a break of structure, this is a break of structure, this is a change of structure, and this is a change of structure, all of this will make so much more sense. So go check out episode 5 of MSM, and you will understand it, right? Again, for those that finished this brief presentation and still don't understand supply and demand, I suggest heading to episode 5 of MSM. Buy demand in an uptrend, sell supply in a downtrend. Do not fade reversal setups. They are there for a reason and have a high hit rate on playing out. Use higher time frame to locate order blocks, then work on the lower time frame when price comes into that point of interest for trade entry and execution. And that is it. Has anyone got any questions? Stream class is recorded. Oh, we got a little pop. How much are we up? What was up? Missed it. 1%. I'll elaborate on supply and demand. There's so much more to get into, but you know, we've just been talking for 40 minutes, so I don't want to keep these classes longer than that, really. No, the time changes, bobbers. It changes. It varies. I try and if people can't make 1 week, I try and fit them in another week. And vice versa. Yeah, sometimes I do a bit later, like sometimes I do 8ish or something. I won't keep you guys too much longer anyway. I'm going to upload this, and I'll also send you guys the presentation. For you to go back and watch. Check out episode 5 if you haven't done already. I appreciate everyone from stopping by. I had a good turnout today. It was good. Legends, guys. Catch you later. Thank you very much.